Hi, Heath. Great that you could join us today at Stanford Blockchain Club.
Thank you so much for having me, Jay. And it's a particular honor to be here at the Stanford Blockchain Club because many of the current attributes of blockchains, as well as future attributes, no doubt, have come from your members and the larger Stanford blockchain community. So thank you so much for having me.
Thanks a lot. Yes, I would say like Stanford is definitely obviously like since the birth of the internet, it's been one of the powerhouses of innovation. So we really want to continue that into the age of crypto and into the age of blockchains. Would you mind telling me a little bit about yourself before we start?
Sure. I am Heath Tarbert, Chief Legal Officer and Head of Corporate Affairs at Circle, one of the world's leading fintech firms in the blockchain space, where we issue, among other things, the stablecoin USDC.
Mhm.
Before that, I was in the private sector in TradFi at one of the largest securities trading firms in the world, Citadel Securities. And then immediately before that, I had some stints in the United States government. I was Assistant Secretary of the Treasury for International Markets, where I first encountered blockchain and sort of the issues that it raises from a regulatory standpoint. And then I was honored to serve as the 14th chairman and chief executive of the Commodity Futures Trading Commission, which is also very relevant to this space. And then, of course, prior to that, I had served in other governmental roles, a lawyer by training. So, not a technical engineering expert like many of your listeners are, but my hope is that with my sort of background, I can probably fill in some of the missing gaps,
Mm.
particularly for those of you in Silicon Valley and beyond, thinking about well, what's going on in Washington and in the policy realm. So that's my background.
Yeah, that's a super exciting role to fill and definitely really useful for all of us club members who are looking to potentially build their own companies in the future. So I guess my first question is, can you give me kind of like a brief overview of why stablecoins were created in the first place? And particularly, why was something like USDC created?
Yeah, so as best I can tell, it was a very simple issue.
Mhm,
People wanted to buy digital assets, particularly Bitcoin and then later Ether,
mhm,
but those things were quoted in US dollars. And so the question became, well, how do we get dollars onto the blockchain or onto the systems that allow you to interact with the blockchain such that we could actually purchase and sell digital assets? So the answer was actually pretty simple and pretty mundane in many ways, which was, well, we need to create a digital dollar. We need to actually have a program of programmable money that's similar to the other digital assets, but that represents and can always represent a US dollar. And
mhm.
so, and potentially other currencies as well, but by and large, the US dollar is sort of the main currency of the world, particularly in the digital assets market. And so the engineers here at Circle, working actually with the folks at Coinbase, said, let's create a digital dollar that is fully backed and at all times will be worth a US dollar. So people can now use these in the crypto ecosystem to buy and sell other digital assets.
Yeah, that sounds really cool and definitely plays a major role today. So USDC right now is the second largest stablecoin. So what do you think differentiates USDC as a product from other stablecoins that exist out in the market?
Yeah. So I would say the number one comes down to trust. We wanted to build a digital dollar that people could trust that
Mhm,
was made here in America. Many of the other stable coins are issued from overseas.
mhm,
But when people want a dollar, I think many people would say, well, I want a dollar where dollars come from. And I want to know that the institution issuing these digital dollars is regulated
mhm,
by the US government, by state governments. And so we are. We're regulated. We're sort of the world's largest regulated
mhm,
digital dollar issuer. The other thing that I think really sets Circle apart from our competitors is transparency.
mhm.
We are the most transparent digital dollar out there. You can see at any given time what our reserves are backing USDC, and you can actually go in 80 to 90% of the reserves backing USDC are actually managed by BlackRock, a third party manager who has a special fund that's called the Circle Reserve Fund. And you can even go into the fund and look at the QSIP numbers of the US treasuries
Wow.
backing up USDC. So transparency is number one. And we didn't have to do that. But our view was let's create what we think people want and need out there and let's build it ourselves. And then finally, I would say, secure, safety, and really innovation. So the product itself, many people would say, is the most basic product of digital assets,
Mhm.
right? In some ways, it's very simple. It's a digital dollar.
Yeah.
But what we're also building on top of that is, what we think will become the largest stablecoin network, which has interesting things like the cross-chain transfer protocol, some gas stations, some all sorts of other technological features that make it far easier for people to use USDC than any other stablecoin in the world.
Yeah, that's super compelling as like a rationale for USDC. So stablecoins today have become one of the largest buyers of US Treasury bills. You've mentioned how a lot of the backing is with traditional assets. I'm guessing a large part is going to be T-bills. So how do you think these stablecoins should interact with legacy financial instruments such as T-bills and other backings that you've mentioned?
Yeah, so I think for people to have faith and confidence that when you buy a USDC,
Mhm.
it is worth a dollar and it is backed by the dollar,
Mhm.
you want to have dollar denominated assets backing it. So that really comes down to cash and things that are generally viewed as the equivalent of cash, so i.e. T-bills.
Yeah.
If you have other assets backing it, then there's always a concern that market factors could be what they are, and you won't have enough assets that are dollar denominated assets backing it. So ultimately, I think T-bills are going to be a big part, and you see this in sort of the current legislation pending for stablecoin issuers. Now, of course, for those of us in America, it's a great thing
Yeah.
because it means that as stablecoins continue to grow, there will be a natural market for U.S. Treasuries, and when we purchase U.S. Treasuries, we obviously strengthen the world's our national security capacities. We strengthen our economy. We allow the government to borrow cheaply. So I always think that you're going to have stable coins if they're properly regulated, interacting with and buying a large portion of particularly treasury bills, backing them up. And that's what differentiates, I think, stable coins like USDC from bank money.
Mm, okay. That makes a lot of sense. But we also saw that for example, in March 2023, we had USDC depeg down to 85 cents. So in light of this, what do you believe are kind of like the largest systemic risks to USDC and other stablecoins? And are they susceptible to the same traditional risks that bank faces?
Yeah, so I'm so glad you brought that up, Jay. So first of all, from a technical standpoint, we never actually had a true depeg of USDC in the sense that at no point did Circle ever say we're not going to redeem USDC for a dollar. So
Mm,
throughout that whole period of instability, Circle always stood ready to redeem USDC one for one. But
um,
what we did see, which you've pointed out, is in the secondary markets, right? So
mm,
this is the trading markets. The banking crisis in the United States uh, shed doubt because Circle had, a portion of the USDC in cash. In that case, in Silicon Valley Bank,
mm.
and so people were concerned. Well, is Circle going to continue to honor? So of course, we always continue to honor, but in the secondary markets, there was a temporary price dislocation.
Uh,
So we obviously don't want that to happen again. We'll continue to honor it, but we also want the markets to know that we will always continue to honor it, and the reserves backing USDC remain reserved. So one of the issues there, and this is a great lesson for those in the Stanford blockchain community, because many of the people you'll hear, the radicals, on the left and maybe even on the right, will say, well, crypto's bad for banking, et cetera, et cetera. No, no, no. In this instance, it was the banking system itself,
mhm,
the fragility, the sort of lack of sound regulation that actually potentially endangered the crypto ecosystem. It wasn't the crypto
mhm,
ecosystem endangering the bank. So it's a very important lesson.
mm,
And so it's important to talk about, I think, so what I would say is we need sound regulation of stable coins. That's something Circle is pushing for. We need everyone to know that the reserves backing USDC are safe and sound at all times, which they are. But I think it's also important to point out that one of the great lessons of the SVB crisis was how inherently unstable our banking system is. Now I can say this. Now it's not going to collapse or anything like that. It is a strong banking system, and I would say perhaps the strongest banking system in the world.
mhm,
But one of the reasons it's strong is because you have FDIC insurance and you have Federal Reserve discount window access. So in other words, the banking system can't operate without a government backstop at this point in
Um,
time,
yeah.
as well as with a bunch of regulation on capital and liquidity.
Mhm.
So the dollars that are floating around in our financial system are actually part of something called the fractional reserve banking
Yeah.
system. So, which those of you at Stanford that have taken your economics courses know this. And so the point is that um, when you have a stable coin
Mhm.
that is backed one for one with dollars and dollar equivalents like short-term treasuries. When you
Mm.
have banking system dollars floating around,
Yeah.
and out of the $21 trillion of M2,
Mhm.
20 of it, 95% of it is actually banking dollars. They're not backed by anything
Uh,
other than the assets on the bank's balance sheet, which are highly leveraged.
mm.
And so you asked the question about stability, and what I would say is, are they subject to the traditional risk of banks?
Yeah.
Well, because stable coins are matched by short-term treasuries, they don't have the inherent maturity mismatch that banks have. And what do I mean by that? When you have your money at a bank, which bank do you bank at?
BOA.
BOA, right. So you bank there, and then but they take your money and they'll put it into 30-year mortgages. So they
Mm.
only have a fraction of your money left. If you come in there and say, "Hey, I want all my money back," they actually don't have your money. It's out in loans,
Right.
right? And so that's not the case with stable coins. We have all that money there. You can see it, and it's in short-term assets that we can immediately get out of, right? Or in short order. So I would say that that's a major difference between bank money and
Mm.
stable coins.
Right. That makes a lot of sense. So in terms of turning towards stablecoin adoption, what do you see as kind of like the primary use cases driving adoption of USDC in particular? And which infrastructure platforms and blockchains do you see the most adoption going on right now?
So we're on something like 15 blockchains and growing. I
Mhm.
would say the largest right now are Ethereum and Solana,
Mhm.
but we're seeing all sorts of other chains block it and adopt USDC. And we also have the cross-chain transfer protocol that allows you to that's installed on some of these blockchains that allows you to move money back and forth. So that
Mm.
makes it easier, so people don't necessarily have to say, once I put my USDC on this blockchain, it's a real pain to get it off. I have to convert it back into fiat money. Right now, though, the primary use case, which started stablecoins that we talked about earlier, is in
Mhm.
the crypto, sort of the crypto ecosystem, the trading, the large exchanges, as well as in DeFi.
Okay.
But now we're seeing, particularly outside the United States, two other major reasons why people are holding USDC.
Yep.
First is cross-border remittances.
Mhm.
For those of you that have to, and many Stanford students come from overseas or they have overseas relatives,
Mhm.
uh, sometimes you're charged 3 to 7% to send
Mhm.
money abroad.
Right.
If you do USDC and you do it wallet to wallet,
Mhm.
you pay a gas fee. That's a fraction, right? So you save a ton of money. So cross-border remittances is a big use case that we're seeing.
Okay.
Another use case we're seeing, again, primarily outside the United States, is a store of value.
Mhm.
People can't get dollars and dollar bank accounts. You live in a country like Argentina.
Mm.
Every time you put your money in pesos, your wealth, you're gambling with your life savings. And so people want dollars. So people will
Mhm.
just buy USDC and hold it just as they would physical bills because it's viewed as safe and secure, as well as it's much easier to sort of send money vis-a-vis physical dollars. So those are the use cases right now. We're also starting to see consumer payments. We're
Mhm.
starting to see institutional use cases, and we're
Mhm.
starting even to see sort of TradFi capital markets take an interest in adopting something like USDC, for example, as margin. But I'd say right
Uh,
now, where we are is we're in the crypto ecosystem, store of value, and remittance, and we're starting to move up this curve of evolution.
Oh, that makes a lot of sense. That's really cool. So I wanted to follow up a little bit more on the consumer payment side. So
Mhm.
obviously the end goal of dollars is that I'm able to get my morning coffee or something. So how does USDC actually interact with these existing payment rails today? What is kind of like the rate of retail adoption that you're seeing actually using these dollars to buy goods and services like my morning coffee?
Great question. So we're starting to see initial use cases that are being borne out and being institutionalized. We don't yet have sort of that massive scaling and network effects. But
Mm.
for example, Grab, which is the if those of you that are in Asia know Grab, they're effectively like Uber plus takeout taxi plus everything combined.
Oh.
You use Grab for all sorts of things. Now you can use USDC as a payment option, for example, in Grab. Nubank in South America is starting to allow digital dollars in the bank accounts alongside regular bank accounts. And so you'll start to see more and more people accept it. Circle has programs now and partnerships with both Visa and MasterCard that
Mm.
at some point you'll start to see adoption. So what I would say is that right now we exist alongside the rails. We've built interconnectedness with the traditional rails,
Mhm.
and I think within the next 5 years, you're going to start to see more and more people using digital assets like USDC stablecoins to buy and sell stuff. So the future is coming as more and more things move on chain. And as the internet financial system merges with the traditional financial system, you'll see these use cases. So right now, we're sort of laying the foundation, and one day it will come.
Oh, that makes sense. So, so how in this like future vision of the dollar, so how do stable coins, in particular USDC, compare kind of like a means of digital payment compared to say other digital dollar systems like ACH, PayPal, FedNow, and CDBCs essentially?
So it's a great question, and it's a complicated series of networks, some of which have existed since the 1970s. And so I've thought to myself, well, how do I explain this in the most simple manner?
Right.
And how I've come up with it is basically this. Right now, the systems that we have, the payment systems,
Mhm.
are really first and foremost communication systems between centralized ledgers.
Oh, okay.
Me at bank A telling you at bank B, yeah, Jay's taking money out of this account and we're going to send it to your account. But the
Right.
money moves separately.
Okay.
So over time, what we found is that essentially the communication has been instantaneous, near instantaneous.
Mhm.
It used to be centralized when you had a Swift system, and that still exists between banks. Now it's more decentralized communication. So, for example, Zelle, Venmo, PayPal, etc.,
Wait.
where we're able to converse. But ultimately, the money itself is not moving with that message.
Okay.
The money is moving behind the scenes, and sometimes it takes days. In many cases, it does take days to move.
Oh.
The radical transformation is this: with digital dollars and stable coins, I'm sending the message and the money simultaneously. We're
Okay.
basically sending a dollar as safely and securely as we can send an email.
Oh, okay.
That's the way that I explain it. And that's why it's such a radical uh, revolution in many ways in the movement of money.
Oh, okay. That makes sense. And because I see that there a lot of the time there's like a transaction pending and stuff on my credit card, and it's not finalized until a few days after, even though like I already have my coffee. So,
Right. You've sent the message, hey, Jay's going to pay you for this. But Jay
mm,
actually hasn't paid you for this yet because the money is still moving through the system.
right.
This is when you buy something with USDC, the moment you get the coffee,
Mhm.
within seconds, the guy's actually getting the money that sold you the coffee.
Oh, that makes sense. Yeah, so we focused a lot on digital dollars, but Circle also has launched the Euro coin pegged to the euro. So how does non-USDC stablecoin adoption and interest, how has that looked like?
So first of all, let me applaud the European Union. Very rarely does the European Union move ahead in an area of innovation. But compared to the United States, they are a couple of years ahead. They
Mm,
have a regime for digital assets, and I give them a ton of credit. They see the promise in this. They
mhm,
also understand the need for sound regulation.
mhm.
So we also have EURC, which is our euro denominated coin, And we're working to make that the first, and it may or may be the only stable coin that is permissible under MiCA, and which is the European regulation.
Wow.
And so the adoption there is much smaller than the adoption of USDC to date. But once it becomes MiCA compliant, then what it will mean is when you go onto an exchange in Europe and you want to buy Bitcoin or Ether or any other digital asset, and you want to, and it's going to be denominated in euros, you'll be able to use this stable coin. And so we'll see. I mean, I am very hopeful that it will also take off. There's no question it will take off. Whether the euro becomes as competitive with the dollar is going to be a question of demand globally. So right now, everyone around the world, generally, except for in the European Union, in most cases, will choose to have the dollar. Something like 80% of international transactions are done via US dollars. So I'm not sure the euro will ever surpass the dollar, but I think the fact that it is now regulated, it's in the European Union, and it's going to be the primary means of exchange for buying digital assets within the European Economic Area, I think you're going to see it grow.
Wow. Yeah, that
As
sounds
well as for, it could also be for people in the European Union that are that are sort of workers from abroad that are paid in euros that want to send their money back home. They may send euros home instead of dollars. So it'll all depend.
Yeah, I guess that makes a lot of sense that you're still waiting on MiCA and all of this new regulation. So moving on to kind of like a more legal regulatory perspective, which is kind of your background as well. So how do you think, how do we actually ensure stablecoins comply with relevant AML, CFT laws, such as economic sanctions that we see, for example, in Tornado Cash? Where do you think the industry needs to get to on this issue to reach kind of mainstream adoption?
It's a great question, and it's a thorny one. So I don't necessarily have an easy answer for you now. But what I would say is, first of all, Circle believes that in order to get mainstream adoption, and ultimately Circle is betting, our entire business model is based on the fact or on the thesis that this will become mainstream, that the financial system of the future will be the internet financial system of the future. So just like you said early on, all the folks at Stanford helped build the internet.
Yeah.
Our view is that internet and the traditional financial system are going to merge, and you'll have an internet financial system, an internet-based financial system. And so we think that on that internet-based financial system, if it's ever going to take off, there needs to be some confidence that it's not a haven for terrorists, for sanctioned nations, for all the other bad stuff.
Yeah.
And so Circle is regulated, like I said, in all of the relevant states that we're in. We are a money transmitter under federal law. We comply with the Patriot Act. We comply with FinCEN guidance. So all of the direct Circle customers are put through AML screening, and even our developers we put through sanction screening that aren't necessarily direct customers for money transmission purposes. That said, I think the U.S. government has to sort of be smart about this, because there is one way to ensure there's no criminals or money laundering or etc., and that's to shut everyone out of the system, right? So we could have a completely closed system, but my view is that's not going to be technologically, it's not going to advance American interest. We want to build an open protocol-based system, just like the internet itself.
Yeah.
At the same time, we want to have safeguards, right? So we want to balance innovation with at the same time putting in safeguards. So in the short term, I think, people are going to have to register as VASP, so virtual asset, service providers. There will be AML, CTF obligations imposed on them. I think, there should be a certain, we should think about who are the real gatekeepers out there, and thinking about what are reasonable sort of regulations to impose upon them.
Yeah.
So there's some degree of screening.
Right.
And then I think ultimately where we want to go, and this is a perfect project for those in the Stanford Blockchain Club who are developing this, is I think ultimately we want to have a system of digital identities.
Okay.
So when people transact over the internet, it's instantaneous that you've already been vetted by somebody. You are not a criminal. You are not a money launderer. you are not a sanctioned nation, for
Yeah.
example, or you're not associated with a sanctioned nation. And
Right.
if that's the case, then things will go a lot smoothly. So I would say like there's a policy aspect to this, but there's also a technology aspect to this that I think the greatest minds at Stanford and our other leading institutions should really carefully think about. Because my hope is that we'll find a market solution sooner than we find a government solution.
All right, got it. So, what has been kind of like the regulatory interest, both by regulatory agencies such as the SEC, CFTC, and by Congress on stablecoins and crypto more generally? How has this kind of affected stablecoin issuers? For example, we see Paxos, which was sued over its handling of USD. How can we like improve the regulatory clarity on this space? Yeah.
The short answer is Congress needs to act. Uh, the short answer is Congress needs to act.
Yeah.
So what you have is a situation, Jay, and I sat in the chair at the helm of one of those agencies that you mentioned.
Mhm.
And the question was, given the current laws on the books, how
Mhm.
do they apply to digital assets and maybe stable coins specifically, right? And so people are working with tools in some cases that were created 90 years ago and saying,
Mm,
how do they apply to digital assets?
yeah.
And so the answer is number one, we have to be thoughtful about it. And in some cases, some of those tools are very useful. We did what we could with the tools that we had.
Yeah.
But in other situations, it just makes sense for Congress to provide that
Mm,
clarity and direction.
right.
Congress speaks for the American people. Congress can pass laws.
Mm,
And so that's what needs to happen, in my view, both in the stablecoin realm as well as in the general realm of digital assets. Who
mhm.
has jurisdiction? How should they be traded, etc.
Yeah, that makes a lot of sense. My final question for you is, do you believe that more crypto companies should attempt traditional IPO listings versus ICO and token listings? What are kind of the benefits, risks for each, particularly for a stablecoin providers such as Circle?
So we are going through the traditional route. We
Mm,
are not issuing tokens. Our digital asset product is USDC. So
mhm.
it's meant to be a form of money. A
Okay.
payment stable coin is the equivalent of money. In fact, in Europe, it's classified as electronic money. And so,
Uh,
therefore, if we're going to raise funds, if we're going to have a public offering of securities,
mm,
right now the path for us is to do it the traditional way. So, if
mhm.
at some point, if we become a public company, and that's our intention, we have confidentially filed our S1 to go public. Then these would be actual securities like stocks. They would be stocks that would trade on a national exchange, just like regular stocks.
Mhm.
The issue with the initial coin offering or the token listing is that I think many people would conclude that they are securities.
Mm,
And so if they are securities, they would be regulated by the SEC and the regime that it administers.
yeah.
And there's a bunch of things that have to be done to comply with those laws. And those laws are not written specifically for tokens, for example.
Mm, right.
And so I think it's going to be hard to do token listings where you conclude that those tokens are securities. And in your question, when you're talking about an IPO, it sounds like you're saying this is the equivalent of an IPO, so they would be securities. Then I
Okay.
think you're running a lot of legal and regulatory risk.
Oh, okay. Sounds great. All right. Thank you so much for joining me today. And thank you so much for answering all of our questions. It was really great chatting with you. Yeah.
Really an honor to be here. And again, I'm very supportive of the organization. You guys are doing tremendous work, and I continue to be a devoted fan.
Thank you so much. I mean, we would love to have you more to come down and speak to Stanford more and have you join us later. So thanks a lot. Yeah.
That sounds great.